bring in Scott Bauer, the CEO of Prosper Trading Academy, to get his thoughts on this. Scott, welcome. Thanks for joining us on a Tuesday and giving us part of yours. Empire State manufacturing data. It's good to see the manufacturing numbers come in strong, considering some of the uncertainty and kind of some of the numbers that we have been seeing. This will help reassure investors that some of that positive sentiment is well-founded.
You're right, Ben, and that number, the Empire State number, it's not, a big number, if you will, in terms of all the economic indicators that we watch. However, it's moving in the right direction, and it's another, it's another sign, like you said, that things are picking up. And this was not just a small beat either. Yeah, this is a very robust number. So it's very encouraging, as well as those import and export numbers. Again, in and of themselves, they're not that big of a deal. But when you just start adding them to the entire puzzle here, and we start seeing, all the different parts of the economy actually start to pick up, and manufacturing had been a little bit weaker, look in the past here. Now you start looking at these import and export numbers, ticking up also. These are really positive signs.
Yeah, I want to talk about how that could kind of shed some more light or more attention onto the industrial production numbers that are due out later this morning in just about 40 minutes here. But let's talk a little bit about those import and those export numbers, because, again, sticking with the trend that we've been seeing, and as you mentioned, the direction that we want to be headed in, these numbers are improving as well. This is a good sign for trade.
No doubt about it. And let's just hope that they continue on a path, grinding higher. I think that's what we would all like to see, is just steady movement. We don't want to see big outlying numbers. We really don't, because then, some doubt starts to come into people's mind, economists' minds. If we can just start to see these continuing grinding numbers, that's a really, really positive sign.
Sure is. Okay. Same store, chain store sales this morning. We'll get Red Book numbers. We'll get industrial production, the 20-year bond auction. But I'd imagine the focal point really is going to be retail sales, the jobs, and the Fed this week. Scott, correct me if I'm wrong.
The Fed. No doubt about it. You hit the nail on the head. Retail sales probably will continue to have that grind that I just talked about. I don't expect any big outlier here, but it would be nice just to see just a gradual uptick here. The jobs number on Thursday, but everyone's going to look to, the Fed. Their meeting is today. We get the announcement tomorrow. They're probably not going to say much. They're not going to do much, but it would be nice to see, what their take is on their new inflation target, and still how, the virus is kind of factoring into their longer term plans here.
Scott, that's a good look at what's been playing out here close to home. Let's take a trip overseas across the big pond, and let's talk a little bit about, I'm just shocked to see some of the headlines. It looks like UK Brexit discussions are starting to hit a rocky patch again. I mean, we could be back to where we were, it seems like 2 years ago. I mean, this just continues to provide uncertainty, unknown. This time it seems like it's Boris Johnson again.
Talk about Groundhog Day. I mean, this is like, 2018, 2017 all over again here. And, it's pretty interesting, Ben, because even though that is front and center, especially if you live in the UK, live in, that part of the world, but it almost seems to be taking a back seat to everything else right now, given what we have with the election, given obviously with COVID and economies around the world. Yet, this is a very, very important, turning point, if you will. Again, another turning point in these Brexit negotiations.
Yeah, the British pound's definitely been a reflection of some of the uncertainties recently, coming off that 127.68 level, holding above 129 right now. It's higher, but I think that's more tied to some of the weakness we're seeing in the U.S. dollar. Let's talk about the U.S. dollar and what you're seeing there, Scott. It's been kind of range-bound recently, but it's having a hard time getting anything going off these lows. And when I see this kind of price activity in an environment that's been a very well-defined trend environment lower, I kind of think of this as acceptance. There's no rejection of these recent lows as of yet. We're talking multi-year lows, and that's even ahead of the Fed, and with recent activity where the ECB was kind of talking down the euro currency there. In fact, I mentioned at the top of the show the euro FX contract had a record open interest and record volume. I mean, there's definitely participation here in these products. People are trading currencies.
Oh, there's no doubt about it. And like you said, the fact that the volumes are so high, and it really shows that acceptance
Yeah.
to the weaker dollar right now,
Good point.
and this really tight trading zone that we've had
Yeah.
ever since we broke down below those March lows around 93 and a half or so. The dollar has really had some difficulty recapturing those levels there. And with the weakness, that we're seeing again this morning, that's why we're seeing a little bit of a pop in gold and some of the commodity space.
Scott, talk to me about rates, treasuries, because this is the dollar weakness there is really a reflection of the Fed's stance. They've been very clear. We're not even thinking about raising rates, and they're willing to let the inflation run a little hot. I mean, in theory, that's somewhat bearish dollar as well. It would seem like it's going to take longer for them to raise rates if they're willing to let inflation run a little hot. And, we've been very much range bound. I keep telling everybody we got to wait and see until we break out of the March highs and lows before we get anything any real directional conviction at this point. But that's a wide range, and everybody, keeps talking. We're talking 2% down to 0.8 in the 30-year, and in the 10-year, it's like 1.3 down to 0.3. I mean, this is a wide range, but until we break out of it, it's just noise. Would you agree?
Absolutely, and we're not going to break out of that in a day, a week, a month. I mean, that's going to take some time to really develop there. And we're seeing, the 10-year right now is approaching, 0.69, I think.
Yeah,
it's a little surprising to me that it's on that uptick there. But yeah, this weaker dollar to me is not going away. We may see, pops here and there, but it's not going away anytime soon. The Fed is not going to change their stance tomorrow, so I just don't see where rates are going.
Scott, we've got the TNX, as you mentioned, at 0.68, and we also have treasuries right now, the 10-year and the 10-year teetering around that 50-day moving average. Scott, really appreciate you joining us here. This is a great breakdown in terms of what to keep an eye on here today as far as what's playing out. Numbers headed our way, the Fed, and, look at the dollar, euro currency. Scott, always appreciate you joining us here and giving us part of your day. Scott Bauer, ladies and gentlemen. You can check him out at Prosper Trading Academy. He's the CEO and, again, a major contributor here across the TD Ameritrade network. Now that we've